The US dollar controls the world. In fact, it is the most powerful weapon America has to influence the world economy. Now, over the last 9 months, we have been in a terrible currency crisis and devaluations are happening globally. Global currencies, they are getting crushed, and a lot of us are witnessing the utter devastation of both emerging and developed economies. We have the euro, the pound, and the Japanese yen all falling against the dollar, and this is causing their local inflation to soar. In fact, the hardest hit are the currencies from the developing economies such as Sri Lanka, Turkey, and Argentina, all suffering more than a 20% devaluation. And this is how much power the US dollar has as the reserve currency of the world. The world is essentially hostage to the dollar. And we have to answer a few critical questions today about the US dollar. How did it get so powerful? Why is the world so reliant on the greenback? And what it might take to dethrone the world reserve currency? Now, the currency crisis we are having today is an excellent starting point for this conversation. So, what exactly is causing a global depreciation of currencies? Now, it stems from two things: a global dollar shortage and the majority of commodities and trade being priced in dollars. Now, dollar shortage sounds very weird, right? After all, hasn't the Federal Reserve been printing trillions of dollars over the last few years? Hasn't Jerome Powell been printing money like no tomorrow? And this is where things get very interesting. Because the Federal Reserve is leading the world in hiking rates to crush inflation, we are seeing money flow from every part of the world into dollars. Investors they want dollars because it is the most useful currency today, and because the cost of borrowing is higher, there are fewer dollars circulating around, and this sets up a deadly spiral where now countries rush to stockpile dollars because commodities they are all priced in dollars, especially food and fuel. And this causes the dollar to rise higher and countries have to spend more local currency to buy it. And that's why we are seeing a global depreciation of currencies today. The dollar rising allows cheaper imports to the US while other countries have to pay more. Now, in fact, emerging markets they are blowing a big hole in their reserves just to stay afloat. But why is everything priced in dollars? Why is there a global dollar addiction? And this is where we need to go back in time and recall two specific events that allowed the dollar to climb to the top of the food chain. An amazing thing is that it all has to do with commodities. Now, the first is the Bretton Woods Agreement in 1944 that pegged the dollar to gold at $35 an ounce, and all other currencies were then linked directly to the US dollar. So, this system was the genesis of how all currencies are compared to the dollar today. Gold gave credibility to the dollar, allowing the rest of the world to trust it as a reserve currency. And eventually, President Nixon he broke the gold standard in 1971 because America didn't have enough gold for the redemptions and they wanted to embark on bigger deficit spending. But the main takeaway here was that the linking of currencies to the dollar was established. Now, the second event, at least to me, is a stroke of genius by Nixon and Kissinger, and that is setting up the petrodollar system that lasted all the way till today. And we have to understand how important the petrodollar was to the United States back in the 70s and how it built the foundations of the US economy. Now, the agreement is very simple, guys, but the ripple effect it had basically cemented the dollar as the reserve currency. It allowed the world to become addicted to the US dollar. So Nixon he met with King Faisal of Saudi Arabia and brokered the ultimate deal. In exchange for security and weapon support, the Saudis can only sell their oil for US dollars. At the moment this was done, it turned the US dollar into the most useful currency on planet Earth. Because if there's one thing every country needs, it is energy. If you don't have oil, you don't have gas, you can't grow your economy, right? And now Saudi Arabia and OPEC by extension only accepts dollars for their energy. If you want to buy oil, you need the dollar. No other currency was accepted. You can't even swap physical gold bullion for oil. So you can just imagine how suddenly there's a rush to stock US dollars and the butterfly effect this had. Countries and central banks that stockpile US dollars to buy oil and gas from OPEC, which till today still controls 60% of oil exports. Because now the world is gradually accumulating tons and tons of dollars, this sets up the ultimate feedback loop for the US dollar to become a global financial asset. That's why even though de-dollarization is happening today, the dollar is still nearly 60% of total central bank assets. And because countries eventually needed dollars to buy oil and gas, they began pricing other commodities and goods in US dollars as well. So gold, wheat, copper, computers, and even television sets all started getting priced in dollars. In fact, over 70% of global trade today is invoiced in the US dollar. And thanks to the constant demand for the reserve currency, This kept the dollar relatively stable versus other countries, and countries started to trust its value more and more, and the global circulation of the currency began going into hyperdrive. So let's understand the setup. Now that countries have a whole stockpile of dollars, they have to find more users for the dollars instead of just letting it sit in the vault. Remember, we are broken away from the gold standard and inflation has always been nearly positive from the 60s onwards, and it even hit above 15% during the early 80s. And this meant if all you held were cash, your purchasing power would erode. So countries they did the next best thing was to buy some US treasuries to enjoy some yield. For example, the Saudis took their dollar proceeds from their oil sales and piled them into US bonds. This is called petrodollar recycling and essentially sets the US economy up for success. So every year, more and more dollars they will pump back into the US bond market to the point that it's over $20 trillion today. And when the demand for US debt is so immense, it raises bond prices and pushes down the yield. Holders of treasuries they get less returns, but they have no choice, right? You still need dollars to buy commodities and stuff, plus inflation is always around the corner. So you suck it up like a good boy and you buy US treasuries. But for the United States, this is the ultimate deal because now borrowing costs are getting cheaper. We can see the 10-year yield dropping over the past 40 years, and that means the US government can run up incredible deficits and American companies can outborrow foreign firms and grow even faster. And that's a big factor why we are seeing American companies dominate the landscape today, especially in technology and financial services. The big banks are mostly US banks, right? And that's because they all had an 80-year head start from the Bretton Woods all the way till today. And this is why de-dollarization is going to take some time, guys. It won't happen in the next few years and probably will take decades. Rome wasn't built in a day and it won't crumble tomorrow. But what's most insidious is how the world gradually dug itself deeper into slavery to the dollar. You see, there are two markets for the US dollar. One is the domestic dollar market within the United States, and if you're American, you should be very familiar with it. It is where the Federal Reserve prints money, the US Treasury sells bonds, and the big banks lend money to the economy. Now, the other is what we call the euro dollar market, which is basically dollars that are held outside of the United States. So, for dollars held in Europe and in Asia, they are all considered euro dollars. And the problem today is that many countries and corporations they issue their domestic debt in dollar denominated bonds. So if you're the Japanese government, you can issue bonds that borrow in US dollars and pay back in dollars upon maturity. And even Toyota is issuing their corporate bonds denominated in the US dollar. And it makes sense because the dollar is stable and the currency risk is much smaller, especially if you're a business. Remember, everything in the world more or less is priced in dollars, so might as well price your bonds in it as well. However, 2022 is giving every country a slap in the face. We have come to the point that over 60% of foreign debt is issued in dollars, and this is making the dollar shortage even worse because the Federal Reserve they are hiking rates. This is causing a credit crunch and the world is scrambling to get more greenbacks. On one hand, you have investors buying dollars as a safe haven, and on the other, you have countries buying dollars to import food and fuel. Plus now, you have companies and governments as well rushing for even more dollars to pay back their dollar denominated debt. And this is the exact reason why the dollar spiked from under 100 all the way to over 113 within the last 9 months. Essentially, the world has dug itself into a position where its economy and trade all depends on the dollar to function. And as a consequence of this dollar appreciation, all other currencies are depreciating and triggering a doom loop. Because you need dollars to import stuff and pay back your bondholders, you have no choice but to sell more of your currency for the greenback, and that pushes the value of the dollar higher and the value of your local currency, the yen, the euro, the pound, even lower. And that's why we even have the United Nations begging the Federal Reserve to stop hiking rates, because rate hikes their beggar die neighbor policy. Your currency appreciates at the expense of crushing other global currencies. And this is why the US dollar has near absolute control over the world. The system is set up in such a way that the dollar is in a self-reinforcing loop that keeps it at the top. Now, breaking away from it is possible, but there will be a lot of pain in the interim. And whether the dollar gets dethroned or not depends on how much pain the rest of the world can tolerate. And that is just the financial consequences of trying to break away from it. Now let's talk about the monetary policies the Federal Reserve has to control the world. Essentially, Jerome Powell is the king of the world economy. When the Fed hikes or eases, it has a magnified effect across the entire world. It doesn't just impact the United States. We already know the devastation rate hikes can cause. It collapses economies that were already fragile like Sri Lanka, making any existing inflation problem even worse. When the Fed causes demand destruction by hiking rates, it destroys demand globally, and other central banks, they have no choice but to tighten or face a currency devaluation. But let's talk about what happens when the Fed eases, or more specifically, what happens when Jerome Powell prints money like no tomorrow. Now, when money gets printed, it expands the money supply, and we all know that it's inflationary. However, the effects are very different for the United States versus the rest of the world, and it doesn't matter if it's a stimulus check sent directly to your home or debt monetization, where the US government sells bonds to the Fed for cash. The US government and US businesses, they get access to the money first, and this is the key point. This means immediate access to the cash to buy up assets or to spend to hire people and grow the business. The immediate cash injection allows the US economy to grow faster and saves them first. Because we have to understand there's a lag time when it comes to monetary policy. Now, when money was printed back in 2020, it took over a year for inflation to catch up and rise above 3% and reach a peak of over 9%. And when inflation finally hits, the dollar is insulated from the full effects of debasement because it is the world reserve currency. There's an ocean of dollars floating around the world. Remember, central banks stockpile it while investors and businesses hold it. So the loss of purchasing power is diluted across all the dollars held in the world. The US essentially exported their inflation away. And this is how powerful the US dollar is. When you have the world reserve currency, no matter what action you take, you win in the short term. If you hike, you crush the global economy more than your own, so you're still the leading economy. And if you ease, you gain access to cheap money and can grow even faster before inflation is shared with the rest of the world. It is a win-win solution. This is why the US dollar is extremely hard to dethrone. We know of the dollarization that's happening, like China dumping US debt, but it is not that straightforward. The dollar system is set up in such a way it defends itself against being dethroned by hurting the world as a whole as it goes down. And this is called the Triffin dilemma, a paradox coined by Robert Triffin, an economist from Yale. Now, he postulated that the US has to continue running huge payment deficits to feed the world with dollars, because if they don't, we could see a dollar shortage and liquidity dry up. Now, this will lead to economic instability and financial chaos for the world. It is what we are seeing now is all the effects of a global dollar shortage, which is crushing all other currencies. And this is causing global inflation to soar, especially for big importers. Now, the second part of the Triffin dilemma states that to prevent such financial chaos, we have to accept the dollar system. But all this excessive deficit spending by the US government and money printing insanity are eroding the value of the US dollar. This makes inflation always a clear and present danger, and it will push the world away from the dollar, also leading to instability. So it's painful either way. Countries have to choose whether they prefer to bleed out slowly or endure massive short-term pain in order to de-dollarize. And let's use Saudi Arabia as a good example. Let's say Saudi Arabia, they join BRICS and they do the unthinkable. They start pricing oil in another currency. It could be the yuan, the rupee, or maybe even the new BRICS currency. Now, if you're part of the de-dollarization crowd, you will be cheering, and you'll be right. It is the world moving away from dollars. However, the short-term effects on the world could be quite disastrous because we are going to face another dollar shortage crisis again. And let me explain. Because now the global supply of dollars is going to drop, countries will start using the yuan or even their own local currency to buy oil from the Saudis and OPEC. There will be more bilateral trade, so fewer dollars will be in circulation. But remember that more than 60% of foreign debt is denominated in US dollars, and the global debt is smashing above 300 trillion in 2021. And this is a big problem for countries outside of the United States because the US Treasury, through the Federal Reserve, they can always print money to inflate away their debt obligations, right? The rest of the world, we can't. So there could be defaults happening, or at the very least, the US dollar actually strengthening in the short term as the world scrambles around for dollars at the same time. And that's why the only way for true de-dollarization to happen is if countries they are willing to take the short-term pain and push forward. And they also have to slowly unwind away from the dollar-denominated debt and issue bonds in their own local currency or new reserve currency. And this will also expose the bondholders to additional currency risk. And in the short term, it will be harder for nations to raise money. but this is the price to pay if you want to break free from the US dollar. But make no mistake, the world's already moving away from the dollar. We are seeing enormous cracks starting to form over the last 12 months, and all these are self-inflicted wounds by the United States when they weaponized the dollar and used it as a financial weapon of mass economic destruction. Sure, you can explain away the rate hikes, the QE1, QE2, QE3 as part of monetary policy to protect the US economy, right? But the moment they froze Russia's dollar reserve assets, the US opened up Pandora's box, right? The law of unintended consequences is now in effect. And we just need to look at the US Treasury market and the move towards the ultimate store of value, which is gold. Now, looking at the US Treasury market, we can see a global sell-off of US bonds led by China and Japan. They have reduced their holdings by tens of billions, with Japan dumping almost $80 billion worth in September. And it's a global sell-off, guys. We have Switzerland, Taiwan, India, France, Canada, Norway, and Germany all exiting treasuries. And this is what happens when trust in the dollar is evaporating and countries are trying to defend their currencies against the soaring dollar. But where is all this money going to? Well, it's all heading to gold, guys. A big portion is going there. Central banks, they have been aggressively stockpiling physical gold because they know the end game is coming and the currency life cycle of the dollar is nearing its end. Yes, the dollar is strengthening because of the way the system is set up, but it is also suffering from a confidence crisis. We can see that central banks, they have been buying enormous amounts of gold over the last decade, and it really doesn't matter what the price is. They were buying when gold went above $2,000, and as prices start dropping below 1800, central banks, they are buying even more. They know that the end game is near, and by dumping the dollar assets and stockpiling gold, they are diversifying their risks away. And this flight from dollars into hard assets is just going to accelerate. But understand that the United States isn't going to just sit back and watch this happen. There are still many tricks that they can pull to remind the world that the dollar is still the reserve currency. Now, this can include locking away the US consumer market to countries or banning them from using SWIFT. And this will impose another dollar shortage and crush the country's currency. It is a reminder that the dollar is still number one. But the most insidious plan to keep the dollar on top is the development of the US CBDC, the digital dollar. Now we have the Federal Reserve launching their digital dollar pilot program because they needed to retain the dollar's dominance. The Fed is now working with the big banks to pilot test the new digital dollar. Tracking what we buy with the CBDC probably isn't the main reason. I believe it's all about the dollar supremacy. Powell himself is on record saying that the CBDC can help the US dollar stay on top as the reserve currency. And with the digital dollar, the US can create another financial matrix to keep the world hooked on the dollar for their transactions, but this time it'll be in the digital space. They're trying to make the network effect of the dollar stronger, so dethroning it is going to be even much harder. Now, it's very likely that we'll one day witness a battle between the reserve currencies, the dollar that relies on a legacy system of established network and fear, versus a competitor currency that's backed up by commodities such as oil or gold. And this is why the question of de-dollarization is a complex one. Trying to dethrone the dollar will take time and it won't be instant. It will likely take decades, and even when the dollar is knocked off its pedestal, it won't vanish into thin air. It will still be one of the various reserve currencies. And we need to remember that the US still has the world's biggest consumer base, the most developed financial system, and is home to tech innovation, so there will still be some demand for dollars to buy American goods and invest in American companies. But if the dollar loses its status as the world reserve currency, we will see a series of events that will make the US economy grow slower. Bond yields will rise and domestic inflation will soar as all the dollars start flooding back into the United States. So I hope this video has given you a good understanding of the US dollar and why it is still on top of the world. Even after all the money printing and demand destruction going on, the world still clings on to the dollar because of the system that was set up decades ago. However, de-dollarization is already here and many countries in the East, they have had enough. We have crossed the Rubicon and there's no turning back. So let me know what you think in the comments below. Can the dollar still maintain its position as the world reserve currency, or is the dollar done and it's just a matter of time before it's replaced? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.